Okay, so we have talked about how to market yourself. We have talked about how to make a phone call. Now it's time to start talking about running a presentation. So when you are out in front of your customers, you want to first stay true to your brand. Your brand, at least from my viewpoint, should always be education. We are not in sales. We are marketers. We educate, we teach, we help. Because you work with pretty much every product in the market, you don't ever have to convince your customer to buy anything. What you should be doing is helping them and guiding them through the purchasing process of finding the plan that is best for them. Sometimes that plan is going to make you a lot of money. Sometimes it might not make you quite so much. But if you do what's best for the customer, they'll be faithful, they'll be loyal, they will send referrals your way, they will stay on the books for a long period of time, and ultimately your business will flourish because of it. So, step one in understanding how to present is just knowing how the industry works. At the time that this video is being recorded, there are really 4 different plan types out there in the individual market. So you have ACA plans, which are the marketplace, or the Affordable Care Act, or Obamacare. You have short-term medical plans, and depending upon the state that you're in, short-term plans can range anywhere from 6 months to 3 years. There are faith-based Christian plans, and those plans are going to be specifically for Christians or people of faith. And then there are going to be fixed indemnity plans. Now, 95% of what you will run across out there will be someone who should wind up with an ACA plan or a short-term plan. But let's talk about the Christian share plans, and let's talk about the indemnity plans, because you're going to need to know those plans so that you can sell against them. Because very, very few times should people have these plans, okay? The telemarketers of the world are going to try to convince people to buy indemnity plans because they make the agent a lot of money. But very, very few people should ever have an indemnity plan. An indemnity plan is really only right for someone who is never going to go into the hospital, because an indemnity plan is going to cover the little stuff very well. It's not going to cover the big stuff hardly at all. What I mean by that is it will cover doctor's office visits, it will cover scripts, it will cover wellness, it will cover all of the minor services. But when you read through the plans, you will see that there will be very significant holes when it comes to hospitalizations, surgeries, chemotherapies, etc. You need to understand those plans, though, because the telemarketers of the world are going to try to convince your customer to buy them, and the telemarketers of the world are going to only tell your customer the high points of the plan. They'll talk about how cheap the copay is. They'll talk about how there's no deductible. They'll talk about how affordable the plans are, but they won't go into the details of what it doesn't cover when it comes to hospitalizations, surgeries, etc. You know you've got someone who talked to a telemarketer when they tell you that they didn't even get paperwork sent to them. They were just signed right up over the phone without any proof of documents. There was no outline of coverage, no summary of benefits. They were just pushed into their plan. Well, why don't they supply that information? Because they know if anyone ever reads it, they'd never buy it. So they refuse to even send it to their customers for fear of losing the sale. Next, the Christian plans, Medishare, Christian healthcare ministries, etc. These plans are only good for people, again, A, who are going to use the small stuff, or B, people who are married and looking to get pregnant. The reason why I say that is because short-term plans don't cover maternity, indemnity plans don't cover maternity, but the faith-based Christian plans do. Now, what you're going to see with the Christian plans is, first, they're not insurance. It's a bunch of Christians who pool their money together in order to pay claims. Now, as long as there's money in the pool, they can pay for your claims. But if there's not money in the pool, they can't pay for your claims. And they tell you right up front that they don't guarantee that they will have money when it comes to share in your claims. So you need to make sure that your customers are aware of that caveat. Furthermore, even if there is money in the collective bucket, oftentimes the faith-based plans will make you pay for the service up front and then get reimbursed from the share plan on the backside. Well, who has $100,000 laying around when they need heart surgery? Who has $250,000 laying around when they need cancer treatment? So there are definitely inherent issues with these options as well. The other thing that you need to be aware of with the faith-based plans is they're faith-based, and they're going to make you sign a statement of faith. And that statement of faith might say things like, yes, I'm a Christian. I won't drink. I won't smoke. I won't have premarital sex. I won't use contraception. I go to church on a weekly basis. I contribute to my church on a weekly basis. Marriage should only be between a man and a woman. And they will only pay claims based on that statement of faith. So let me give you an example. I won't have premarital sex. So if you have a faith-based plan and you're not married and you get pregnant, they're not going to cover it, because only married people per the Catholic faith or Christian faith should be having children, and therefore they're only going to pay for a claim for maternity if someone is married. So you want to educate people on that, though, because if you don't tell them the positives and negatives of the share plan, if you don't tell them the positives and negatives of the indemnity plan, when they hear about their neighbor who has one of these options, they might get sold or convinced to look into it. So you need to teach and educate. Now, that then leads us to the last two options, the short-term plan and the ACA plan. This, again, will be the vast majority of what you sell. So how do you know which is right for your customer? Well, let's talk through the positives and negatives of both. So first, the ACA plan does cover preventative care, pre-existing conditions, maternity, contraception, mental health, substance abuse, dental and vision for anyone under the age of 18. A short-term plan does not cover any of those things. So if you have someone who has some major pre-existing conditions and they want them covered, they should have an ACA plan. If you have someone who wants to get pregnant, they should have an ACA plan. If you have someone who is going to use the preventative care a lot, they may want an ACA plan. We'll circle back around to that here in a minute. But the short-term plan doesn't cover any of those things. So a short-term plan will not cover pre-existing conditions. A short-term plan will not cover preventative care, will not cover maternity, will not cover contraception, will not cover mental health, will not cover substance abuse. So who is that plan right for? Someone who doesn't need those things. I'm 43. I have no pre-existing conditions. Certainly not getting pregnant. I don't use contraception. And I'm willing to pay for my 1 yearly exam out of pocket. So if a short-term plan is significantly cheaper, I might be a good candidate for a short-term plan because I don't need any of the things that the ACA has to offer. Furthermore, the ACA is right for someone who gets government subsidies. Dollar for dollar, without a subsidy, an ACA plan is significantly more expensive than a short-term plan because it covers all the things that we just listed. But if your income is low enough, you will qualify for government subsidies. And what that means is that sometimes, depending upon income, an ACA plan can actually be just as cheap, if not even cheaper than a short-term plan. So obviously, if someone's income is low enough where they can get a very cheap ACA plan, who cares if it covers things that I don't necessarily need? If I'm getting that coverage and it's still cheaper, now it's a win-win. But for many business owners, they're going to make too much money to qualify for government subsidies. And so if they don't need the pre-existing conditions, they don't need the preventative care, they don't need the maternity, and they're not going to get a government subsidy, there's really no good reason to put them on to an ACA plan. So that customer would be better suited for a short-term plan. So ultimately, you are going to ask questions right up front. Ask them about their pre-existing conditions. Ask them if they take medicines. Ask them how often they go to the doctor. Ask them if they're looking to get pregnant or need mental health coverage. And you will quickly find some customers will be right for the ACA. Some customers will be right for a short-term plan. Now again, short-term is different from state to state. most of the agents watching this video will be in either Michigan or Ohio. As the law stands today, and this could change, and I will certainly educate you if the information does change. But as of today, in Michigan, you can only do a 6-month short-term plan. In Ohio, you can only do a 1-year short-term plan. So that means each and every year you have to re-qualify for them. Okay, you have to repurchase them. And the insurance company is going to look at your medical history at that point. So let me give you an example. Let's say I buy a short-term plan today. I'm in good health as of today. It's a 1-year short-term plan, so it will expire 1 year from today. A year from now, I go to then buy another short-term plan. They're going to look at my health history all over again. Now, if I develop cancer sometime in the next 365 days, my short-term plan will cover it till the end of that plan. But then when I go to buy a new plan, I now have a pre-existing condition. So now that short-term plan won't necessarily work for me. So sometimes we have a customer who's right for a short-term plan in 1 year, but needs to go to a marketplace plan the next. So definitely make sure that you understand how that works so that you can educate your customer as to how that works. Last is you want to understand that, again, as the market sits today, short-term plans are going to be PPOs. So you're going to have in-network and out-of-network providers, while all ACA plans are going to be HMOs, which means you can only go to in-network providers. Now, depending upon where you live, in Central Ohio, the plans are very simple because each carrier is basically married to one hospital system. So, as an example, in Central Ohio, you have 2 carriers that have partnered with Ohio Health. You have 2 carriers that have partnered with Mount Carmel, and you have 2 carriers who have partnered with OSU. And so if you want OSU doctors, you have 2 choices. If you want Ohio Health doctors, you have 2 choices. And if you want Mount Carmel doctors, you have 2 choices. It makes it very simple if someone has a preferred doctor. But understand, they also come with different prices. The OSU plans are significantly more expensive than the Mount Carmel plans or the Ohio Health plans. So sometimes someone may have a doctor that they want, but you still want to educate them as to how much of a price difference it is from the plan that has their doctors to a plan that maybe does not. Okay? So when you sit down with your customer, you're going to educate them on the marketplace options. You're going to educate them on the short-term options. You're going to educate them on the Christian options and educate them on the indemnity options so that they can make a decision. Now, don't get me wrong. There will be times where you know right out of the gates that a certain plan is best for someone. If they're low income, if they have major pre-existing conditions, if they want to get pregnant, etc., you know that is an ACA customer. If their income is high enough to where they don't get subsidies and they have no pre-existing conditions and they're not looking to get pregnant and they have no mental health issues, you know that's chances are going to be a short-term customer. But you still want to educate your customer on all of them because you don't want them feeling that they are being sold. You want them to feel educated, consulted, and you want them to feel as if they are the ones driving this decision. Okay? Now, assuming that a customer decides to go with the ACA, your next step is to help them pick which level of plan. I would strongly encourage that 90% or more, you wind up selling bronze level plans. Yes, a gold level plan has a lower deductible. Yes, a silver level plan has a middle of the road deductible. And yes, a bronze level plan has the highest deductible. But what you will find is that the out-of-pocket maximums are almost the same for all the plans all the way across the board. And so that means if someone has cancer, someone has a stroke, if someone has a major condition, they're out of pocket on the gold, it's going to be the exact same number as it will be on the bronze. So why on earth would someone pay all this extra money to go with a gold level plan when they could go with a bronze? So after you've consulted the customer on ACA, short-term, Christian plan, indemnity plan, assuming your customer says they want an ACA, you're then going to help them understand why they should have a bronze. Now, what that means is that the price is going to be lower as well. And so that's going to give you the ability to help build in some dental, some vision, some accident riders, some illness riders, some life insurance. You will have freed up the customer's budget so that they can get those other plans for themselves. If they buy a gold level plan, they may not have any disposable income to be able to get those options. And at the same time, if their out-of-pocket maximum is any lower, are you really doing them any justice by getting them that gold level plan? So now you've been in front of the customer for 10, 15 minutes. You've educated them on the industry. You've educated them on different tiers of plans. You know their doctors, so you know if they need to be with one company or another, because our quoting tools are going to help them find the appropriate plan. Now, quite honestly, the vast majority of the work is done. So that's where we're going to stop this video. We're going to start up another video here, and we're going to talk about fact finding, how you can help the customer build the policy the right way to not only cover themselves, to not only cover their medical expenses, but also to make sure that they don't file bankruptcy, they don't lose the house, they don't lose their business, etc.